Hey everybody, Joe from Avalon here. If you haven't heard of us already, we're a Canadian cloud accounting firm with over 10 years of experience supporting hundreds of small and medium-sized businesses across the country. And in that time, we've seen just about everything when it comes to bookkeeping, the good, the bad, and the mistakes that happen more often than you'd think. Some of them might seem small, but they can lead to bigger issues down the line. And trust me, it's a lot cheaper to prevent them than it is to fix them later. So in this video, we're walking through the most common bookkeeping mistakes we see and how you can avoid them. And if you've done some of these already, don't worry, you're not the only one. The important thing is knowing what to watch for so you can clean it up and move forward. So let's get into it. One of the biggest bookkeeping mistakes we see from Canadian business owners is mixing personal and business expenses. It might seem harmless at first. You're grabbing lunch on the go or covering a subscription with your personal card because it's convenient. But when tax season rolls around, that mix-up can turn your bookkeeping into a bit of a nightmare. The CRA wants a clear line between your business spending and your personal life. If everything's blended together, it's harder to prove what's deductible, and that could mean losing out on legitimate write-offs or facing questions during an audit. The fix? Open a dedicated business bank account and a separate credit card meant just for business use. Even if you're a sole proprietor, keeping those transactions apart makes your records cleaner, your reports more accurate, and your life a whole lot easier. It's a simple step that can save hours of sorting later. And if you need more convincing, check out our Why You Need a Separate Bank Account video. Yes, we have one specifically for that. And if you're not sure which business bank account to choose, check out our video on business bank accounts linked in the description below. Falling behind on bookkeeping is one of the most common issues we see, and it can sneak up on you really fast. You get busy running your business, wearing all the hats, and suddenly it's been weeks or even months since you last looked at your books. By that point, catching up feels overwhelming, and that overwhelm makes it even harder to get back on track. The problem is that delayed bookkeeping can lead to bigger issues. You might miss out on claiming expenses, overlook unpaid invoices, or run into cash flow surprises that could have been avoided with up-to-date numbers. The best way to stay ahead is to make bookkeeping a regular habit, whether that means setting aside an hour every Friday or automating tasks with accounting software. Staying consistent is absolutely key. And if bookkeeping just isn't your thing or it's taking up too much of your time, that's a great sign it's time to get some help. Partnering with a bookkeeper or accountant can free you up to focus on running your business and ensures that nothing falls through the cracks. Here at Avalon Accounting, we help business owners stay organized and up to date so that tax season doesn't come with any surprises. And if you're ready for support, you can visit us at avalonaccounting.ca to see how we can help. To claim all your legitimate business expenses, the CRA expects you to have documentation to back them up. That means keeping receipts, invoices, or digital records for anything you plan to deduct. It doesn't have to be complicated, but if you're not keeping track as you go, it's way too easy to lose something important. We've seen business owners scramble at tax time trying to find receipts that got tossed or buried months ago. And if you don't have proof, the CRA could deny the expenses altogether, even if it was totally legitimate. The good news is that there's tools that make this way easier. Apps like Dex let you snap a quick photo of your receipt and store it digitally, along with notes about what it was for. No more shoe or glove boxes or hunting through other areas where you've stuffed them. A little bit of effort now can save you hours of frustration later. Plus, having solid records means fewer questions if you ever do face a CRA review. If you want more tips on this, you can also check out our video on receipt tracking. Misclassifying expenses is a mistake that can quietly mess with your books and your taxes. It usually happens when you're not quite sure which category an expense belongs to, so you guess and move on. But those small guesses can add up to bigger issues later, like inaccurate financial reports or missed deductions. For example, buying a new laptop, that's a capital purchase, not just office supplies. Taking a client out for lunch, that's meals and entertainment, which is only 50% deductible in most cases. Mixing up these categories can lead to incorrect tax filings or even red flags during a review. It's also important for making smart business decisions. When your expenses are properly categorized, you get clearer insight into where your money is going and what areas of the business need attention. Most accounting software can help with auto-categorization, but it's still a good idea to review your reports regularly to make sure everything is landing where it should. And if something looks off, don't be afraid to ask your bookkeeper or accountant for clarification. Getting this right helps you keep more of what you earn and makes tax time way less stressful. Another common mistake we see, especially with DIY bookkeeping, is having way too many accounts in your chart of accounts. It can be tempting to create a super detailed breakdown of every type of expense or income. You might think the more categories, the better, right? But in reality, having too many accounts can make your books messy and hard to read. Here's what ends up happening. Reports become cluttered and less useful. Small dollar amounts get scattered across too many lines. It's harder to spot trends or understand your numbers at a glance. You or your bookkeeper spend way more time categorizing transactions. Instead, aim for a chart of accounts that's clear, consistent, and tailored to how you actually make decisions. Group similar expenses together and focus on what gives you real insights. A simplified chart of accounts makes monthly reporting faster, keeps things cleaner for tax time, and helps your accountant do their job more efficiently, which can save you money in the long run. If you want tips on building a smart, streamlined chart of accounts, check out our blog, How to Build a Chart of Accounts That Actually Makes Sense. And if your books are feeling a little cluttered or overdue for a cleanup, get some help. We're happy to help get things sorted and take bookkeeping and accounting off your plate. Sales tax might not be the most exciting part of running a business, but missing your GST or HST requirements can lead to some seriously costly surprises. A common mistake is waiting too long to register for GST or HST. In Canada, once your business earns $30,000 in revenue over 4 consecutive quarters, you're required to register. If you pass that threshold and keep charging clients without collecting tax, you could be on the hook to pay that tax out of your own pocket. Even once you're registered, it's easy to make mistakes like forgetting to charge the correct amount of tax on invoices or missing filing deadlines. Both can lead to penalties and interest charges from the CRA. To stay on top of things, make sure your invoicing software applies the correct sales tax rate based on who you're selling to and where your customer is located. You can also set calendar reminders for filing deadlines, or even better, automate your sales tax filings with your accounting software. And remember, collecting sales tax means you're holding funds on behalf of the government. Keeping those amounts set aside in a separate account can save you from scrambling when it's time to remit. If you're not sure whether you need to register or how to manage GST and HST for your business, check out our video on this, or even better, talk to an accountant early. It's much easier to set things up right than to fix them after the fact. Doing your own bookkeeping can save money in the early days, but it can also lead to trouble if you're not sure what you're doing. We fully appreciate the DIY approach and often help our clients get set up properly with a bookkeeping system and some training. It can be a good option when you're bootstrapping, wearing all the hats and trying to keep costs low. But if you don't understand the basics of accounting, like how to categorize transactions, reconcile accounts, or track sales tax, it's easy to make mistakes that snowball over time. We've seen business owners with months of messy books, double counted income, or missed expenses, all because they didn't know what to look for. That can make it tough to file taxes, apply for loans, or even know if your business is profitable. If you're managing your own books, we've linked a free bookkeeping guide in the description below to help you get started and on the right foot. It covers the fundamentals and gives you practical steps to stay organized. We also built a few more in-depth bookkeeping courses to help you build a strong bookkeeping system from the start. You can find the links in the description below for those. And when things start to grow or you're spending too much time on bookkeeping, that's a great sign it's time to bring in a pro. A solid bookkeeper or accountant can clean things up and give you back valuable hours each week. Accounting software is a great tool, but relying too much on it can lead to trouble if you're not checking what it's doing. Programs like Xero or QuickBooks can automate a lot of your bookkeeping, which is fantastic. But software only works as well as the information you feed it. If transactions are coded incorrectly or rules are set up wrong, those errors can get repeated over and over and over again. We've seen reports where income was overstated, expenses were missed, or sales taxes were way off, all because no one was double checking the software's work. The key takeaway here is that software is a great tool, but it's not a replacement for oversight. Make a habit of reviewing your reports each month, especially your income statement and balance sheet. If something doesn't look right, dig into it or ask for help. All right, let's quickly recap the biggest bookkeeping mistakes to watch for as a Canadian business owner. We talked about mixing personal and business expenses, falling behind on your books, not keeping receipts, misclassifying expenses, missing your GST or HST requirements, or trying to DIY without learning the basics and relying too much on software without checking your numbers. These are all super common and easily fixable. If you've made a few of those mistakes, you're definitely not alone. The key is to catch them early and put simple systems in place to keep things running smoothly. And if you want support from a team that truly enjoys this stuff, check us out at avalonaccounting.ca. We'd be happy to help and get your bookkeeping back on track. Thanks for watching, and we'll see you in the next video. Cheers.